Hi, this is Elina Gilbert. I am a partner and an attorney at Heinemann Sanchez, and today I'd like to talk to you about the 5 most common types of insurance that all associations should have. The first type of insurance is called a property policy, and essentially what this does is it protects property that the association owns and otherwise maintains. If the property is destroyed or damaged, it will pay to have repairs made to the property and to bring it back up to its original condition. The most typical example we see of the property policy being used is with a fire, with wind and hail, and a lot of times we will see something where there is some sort of a catastrophic event like an accident that occurs within a unit that spreads to the community and causes all sorts of damage like a flood. And property policies, the amount of the property policy really should be based on an assessment of the value of the community, and you should also look at your governing documents before you get a property policy to make sure you know what it is the association has to insure. The next type of policy is called a commercial general liability policy, also referred to as a CGL. This is a policy that will help protect the association from claims of people getting injured on association-owned or maintained properties. Common examples of this would be slip and falls in the parking lot, injuries at the swimming pool, or somebody hurting themselves, for example, if there is a recreational center with a gym and somebody getting hurt. Those are examples that we typically see that involve the commercial general liability policy coming into play. A couple of things to be aware of with the commercial general liability, and that is typical policies do exclude certain items. For example, if there is any willful action by an association or one of its board members or any other agent, that would be excluded. If there is claims of discrimination, that also is typically excluded. And the other thing that's excluded is automobile liability, where, for example, a board member may be driving to a board meeting and they accidentally hit someone while they're driving. That type of a claim would also typically be excluded in the liability policy. And for most of these exclusions, it is possible to get riders and additional coverages that will cover associations for such claims. The third policy is called a Directors and Officers Policy, also known as the D&O. And this policy covers individual board members, it covers managers, and it covers basically anyone on a committee or volunteers doing any types of work for the association. And this is when you are named individually on a lawsuit, and the Directors and Officers Policy will then kick in so that there's no money coming out of your personal pocket to pay for the defense or if any damages are awarded. The fourth type of policy is called a Fidelity Policy. This essentially protects associations from theft, and it includes things like forgery of instruments and, of course, embezzlement. The key to this policy is to remember and to make sure that the policy includes any types of fraudulent acts, not just committed by employees, because associations don't typically have employees. You have independent contractors and agents. So you want to make sure the policy includes any actions performed by anyone who has access to association funds. So that would include your management company, that would include the board members, it would include anyone else who you give access to with respect to money of the association. And the fifth and final policy to make sure all associations have is called an umbrella policy. And what this is an extra layer of insurance for an association to make sure that there is enough money in the pot to cover damages awards. What the umbrella policy does is it will kick in It doesn't affect your property policy, but with respect to all the other ones, it will kick in if the association has gotten to the maximum level of money that each policy will pay out. For example, if an association is sued for a slip and fall and there is a $2 million award for that matter, and the association's liability policy only carries a $1 million limit, your umbrella will then kick in and pay the other $1 million. So it essentially ensures the association that you're not going to have to pay money out of your own pocket to cover any deficiencies or any uncovered losses with respect to liability issues. If you're interested in getting more information on association insurance, please go to our website. The address is below, and you can download articles and you can print them, and there's lots of resources there where you can get additional information. Thank you.